Hey everyone! Do you ever feel like you're never able to trade trends at the best zone? And always had doubts about it? Well, you're in luck. Today, we're breaking down the OTE strategy that will help you tackle that uncertainty head-on. So, let's dive in and boost your trading reward. So, what is exactly OTE? The optimal trade entry, as the name implies, is the zone where you're likely to get the best reward for your risk. Essentially, OTE is all about identifying the best entry points during price retracements. It is the range between the 69% to 79% levels of the Fibonacci retracement tool. According to the ICT trading methodology, this zone is where your risk is neither too little nor too high and is likely to give you the best return. I will show you the FIBO setting in the trading view. So we need to change the settings of Fibonacci levels to numbers of 0, 50%, 62%, 70.5%, 79%, and 1. Think of these FIBO levels as checkpoints. They help you gauge where the price might react. Take note that the actual OTE level is 0.705, but anything between 62% and 79% still falls within the OTE boundary. To draw FIBO, we choose the candlestick body as the reference point. Because shadow or wick is different in brokers. By combining price action analysis, Fibonacci retracements, and an understanding of smart money behavior, OTEs equip you with a targeted approach to entering trades. The core idea is to align your entries with the potential moves of these big players, riding the trend wave they might be creating. So now that you understand what the FIBO settings are, how do we use the Fibonacci retracement? What we will do is look for a swing high to a swing low. Market moves by creating higher highs and higher lows in uptrend and by creating lower lows and lower high in downtrend. In trending market, traders often look for continuation pattern. You assumed it's a market's bullish OK and we want to buy low and sell high to benefit from this bull market. We cannot open a buy position right now because the stop loss is too high and may drop and market structure shift at any moment. So we need to wait for a correction to enter at a better price. After we found my swing high and swing low, we drag our Fibonacci retracement from the swing high to the swing low, and from there retracement levels will be put onto the chart. We always apply this tool from the start of the impulsive wave to the end. However, there are 3 specific retracement levels that create ICT's optimal trading zone. After the price reaction in OTE level, we can enter in buy and stop loss is under the 1 level and target is on FIBO level or according to your trading plan. So in next example we'll be looking at a bearish scenario. It's bearish on the chart because we have a series of lower highs and lower lows forming. So using the FIBO tool, you can drag it from this high down to this low. We're looking for price to retrace to an optimal trade entry. So that is from our 62 to 79, and this is ideally where I want to be looking for either a short entry or a lower time frame entry model or use enter with sell stop position. This was the basic model. Next thing I want to talk about is aligning these optimal trade entries with other PD arrays. We have developed it further by combining it with multiple smart money or ICT techniques such as fair value gaps, liquidity chart patterns, order block, breaker block, or any other entry reasons. You can provide a solid trading strategy. So when you draw out your FIBO level, you look to your left chart and see if there's any PD arrays that line up, and what do you notice? If you have a fair value gap or order block right in the left chart, so now you have overlapping confluences that can make a point of interest to enter trade. Now if we look at the left-hand side, we can see the latest impulsive movement has created that breaker block and order block which coincides with the optimal trading zone. When the price pulls back to these areas, they will act as resistance and likely push the price lower. So now we have multiple confluences per this point of interest here to move lower. And set a sell stop at the 70.5% retracement level. Our stop loss will be placed a couple of pips below the swing high, and we will set the targets according to the trading plan or use FIBO level for bigger target. In another example, we have an uptrend because we have a series of higher highs and higher lows forming. In the left chart we have a fair value gap, and when we draw FIBO it have overlap with OTE zone. Again we see the liquidity before the FVG and OTE zone that can make a point of interest to entry trade. Okay, if this video was helpful, please give it a thumbs up, as it greatly supports the creation of more content like this. Thank you for watching, and see you in the next episode.